Hey guys, Mitch here from Finance Fitness Coaching again. Just a short video on bank segmentation and how to use your bank accounts with each bank. So a bit of an example that we have here is we've got Bob and Mary and their PAYG earners. So their income is being deposited into a savings account. So it's just an everyday account. In some cases it might be a 100% offset of offsetting their PPR mortgage over here. But all we want to see for a bit of clarity and for segmentation of your accounts is only your income coming in here, and you say your medical expenses and your childcare fees and your groceries and all that sort of stuff only coming out of this savings account. No rents or any other income from businesses are to come into this account. So we want to see just the PAYG going into there, some everyday expenses, and then our fortnightly or monthly interest payment to our principal place of residence debt. Now in this instance, Bob and Mary also have an investment property in their own name. So all we want to do is we want to see the rent from that property come into its own little savings account. Okay, so not putting the rent into here, but putting the rent into this savings account to keep it all segmented and keep it clean. And then only see that this loan payment comes out of that savings account, and then of course any expenses like insurance, rates, all that sort of stuff comes out of that savings account. So at the end of the financial year, you turn up to your accountant with this savings account and with this loan account. It's a lot cheaper for you, and it's a lot easier for your finance strategist to help you with the structure and understand how you're going. All you need to do is just keep an eye on this savings account now to make sure that you've got 3 months of payments in this to make sure that that loan payment is looked after and away you go. Now, let's transpose it over here. This company, as trustee for a trust, which has an investment property in it as well, this has its own savings account, which also then pays the loan, pays the insurance, pays the rates, any sort of that information. And basically, only the income for that rental property goes into that savings account, into that property over there. And once again, this instance, only the income from that property goes into that savings account and services that loan. When you have multiple property portfolios, it's a really good idea to keep an eye on these savings accounts or buffers accounts. Keep about 3 months of payments in there so you're never too stressed about having a tenant leave. But it's a really good way to look at bank segmentation and really clean up your accounts. Yes, you're going to end up with a few accounts and savings accounts and loan accounts, but in the end it's worth it. Not only is it cheaper for accounting fees in the end, because I just take this statement and that statement to my accountant and the accounting's done. The accountant, if all the rents are coming into this savings account and then distributing to all these loans, it's a mess. And it's a real mess when your finance strategist comes along and tries to unwind it and help you and sort you out. That's it for today. This is Mitch.